What if I told you that there are companies that have been paying dividends, not for 5, 10, or 20 years, but for more than half a century? And not only that, they've increased them year after year like a Swiss watch, no matter what. Recessions, wars, pandemics, inflation, nothing stops them. They are true dividend kings. Companies that not only distribute profits, but also increase them over time, rewarding those who invest in them with a source of income that grows like a snowball. What's more, some of them are still undervalued. Yes, despite their impressive track record, there's still some very good opportunities that big investors are starting to look at again, and you could take advantage of them. In this video, we're going to reveal 8 stocks that could continue to pay off well into retirement. Before getting into the subject, let's briefly review the concept of dividend yield. This is a percentage that tells us how much money a company pays us per year for each dollar invested in its shares. Simple example. Imagine you buy a stock that costs $50, and that company pays $5 a year in dividends. That means the dividend yield is 10%, 5 divided by 50. If that dividend doesn't change, in 10 years you would have recovered your entire investment from the payouts alone, not to mention any potential increase in the stock price. Now imagine that company increases its dividend every year. That initial 10% can turn into 12%, 15%, or more on the capital you initially invested. That's why investing in companies that increase their dividends year after year can be a good long-term wealth strategy. And now, let's analyze the 8 dividend kings. Stock 1, Johnson & Johnson. This is one of the most iconic and solid companies in the global healthcare sector. Founded in 1886 in the United States, it has been present in the daily lives of millions of people with widely recognized products such as Tylenol and classic Band-Aids. Its business model stands out for its diversification and resilience, factors that have made it stand out even in the most critical economic times. With more than 250 subsidiaries and a presence in over 60 countries, the company has successfully combined the development of medical innovations with strategic acquisitions, thus establishing itself as an undisputed leader in the pharmaceutical and personal care sectors. This strength is also reflected in its shareholder policy, with a dividend yield of nearly 3% and an unbroken track record of increases for more than 6 decades. Johnson & Johnson has become a favorite choice for investors who prioritize stability over speculation. Although its shares do not experience spectacular increases, the confidence and security they convey during periods of economic uncertainty are highly valued in the markets. In a world where many financial assets behave unpredictably, Johnson & Johnson represents a firm commitment to long-term consistency and reliability. Stock 2, 3M. This is one of those ubiquitous companies that become a part of our daily lives without us always noticing. Founded in 1902 in Minnesota, this American company has built a diversified empire that ranges from office products, such as the iconic Post-it notes, to advanced solutions for industry, medicine, automotive, and security. With a portfolio that exceeds 60,000 products and an impressive patent portfolio, 3M has demonstrated over time a remarkable ability to innovate and stay relevant in highly competitive markets. The most fascinating thing about this company is how it has managed to evolve over the years, facing challenges such as recent legal disputes or internal restructuring, without compromising its reputation as one of the great names in dividends. Since 1959, it has continuously increased its payouts and currently offers a dividend yield of around 2.15%. Not bad for such a solid company. While some investors have expressed concerns about its current situation, others see it as a strategic entry point, considering that 3M remains a company with strong fundamentals and a long history of commitment to shareholder returns. It's certainly an interesting bet for those looking for consistent income and recovery potential. If you find this content useful, please give it a like and subscribe to the channel so you don't miss out on future videos. Let's continue. Stock 3, Colgate-Palmolive. It is a true icon of global consumer staples. Founded in the 19th century, this company has achieved something that very few can boast: being present in homes around the world for more than 100 years. Its catalog includes recognized brands such as Colgate, Palmolive, Ajax, Suavitel, and many others that are an essential part of the daily routine of millions of people. The key to its success is offering everyday products that maintain constant demand even in times of crisis, which gives it an operational solidity that is difficult to match. This stability is reflected in its dividend policy. It has been distributing profits to its shareholders for more than a century and has managed to increase them uninterruptedly since 1963. Although its current dividend yield is around 2.22%, which might seem modest compared to other companies, its long-term consistency makes it one of the most reliable options on the market. For investors who prioritize security and predictability over aggressive growth, Colgate-Palmolive represents a true dividend gem. In a changing economic environment, where many companies fluctuate in step with uncertainty, Colgate is the kind of asset that provides peace of mind and consistent results without ups and downs, decade after decade. Stock 4. McDonald's. McDonald's, it is a global phenomenon that has managed to transform a simple hamburger into an emblem of modern capitalism. Founded in 1940 and reinvented by Ray Kroc in the 50s, the company has evolved to become one of the most recognized brands on the planet. But behind the counter, there is more than just fast food. It operates a sophisticated business model based on franchising and real estate investment. In fact, a large part of its income comes from leasing premises to its franchisees, which gives it a constant and predictable source of income. With more than 39,000 restaurants distributed in more than 100 countries, McDonald's has demonstrated an amazing ability to adapt to economic crises, consumer changes, and even technological transformations without losing its growth rate. Since 1976, it has increased its dividend uninterruptedly, supported by stable revenues and solid margins. Today, it offers a dividend yield of nearly 2.22%, offering its shareholders great stability, as can be seen in the stock chart. Stock 5. Coca-Cola. Coca-Cola isn't just a beverage. It's a cultural and economic symbol on a global scale. Founded in 1892 in Atlanta, this company has achieved something very few can, being present in more than 200 countries and recognized by virtually everyone on the planet. But what's truly powerful isn't just its flagship brand, but the immense ecosystem of products it has created around it. From Fanta and Sprite to Minute Maid, Powerade, and Dasani, Coca-Cola controls a diversified portfolio of beverages that are part of the daily lives of millions of consumers. This diversification and its international reach give it enviable operational stability, turning it into a cash flow generating machine, even in times of global crisis. One of the most attractive aspects for investors is its dividend policy. Since 1962, Coca-Cola has increased its shareholder payout annually without interruption. Its dividend yield is around 2.78%, which, while not very high, offers a reliability that few can match. Stock 6. Chevron. Chevron is one of the historical pillars of the global energy sector. Founded in 1879 under the name Pacific Coast Oil Company, it evolved over the centuries to become the colossus it is today, an integral part of the American big oil. Since its inception, it has been at the forefront of the oil and gas business, operating in all stages of the energy chain, from exploration and extraction to refining and product distribution. This integrated structure has allowed it to withstand the ups and downs of crude oil prices and maintain remarkable operational stability. Although the oil market is cyclical by nature, Chevron has managed to manage its resources with a long-term vision that prioritizes both growth and shareholder returns. Since 1988, Chevron has consistently increased its investor payouts. Today, it offers a 5% dividend yield, one of the highest among large companies in the S&P 500 index. This steady stream of income is possible thanks to its robust cash flow, disciplined investment approach, and openness to alternative energy. While it's not the most conservative option on the list, it does represent an interesting combination of high performance and business solidity, ideal for income-seeking investors willing to tolerate some volatility. Stock 7. Realty Income. also known as the Monthly Dividend Company. This American real estate company, founded in 1969, operates as a real estate investment trust and has become one of the most solid benchmarks in the world of passive income. Its business model is simple but very effective. It buys commercial properties and leases them long-term to top-tier companies such as Walgreens, FedEx, 7-Eleven, and Dollar General, among many others. Today, it owns more than 13,000 properties across multiple countries, most of them under triple net leases, where the tenant covers taxes, maintenance, and insurance, thus guaranteeing a very predictable cash flow for realty income. What's most attractive to investors is its commitment to paying monthly dividends, something uncommon even among REITs. Realty income has paid dividends every month since 1970 and has increased them more than 120-fold since going public. Its dividend yield currently hovers around 5.55%, making it an attractive option. Furthermore, its conservative approach and diversification into sectors that are resilient to the economic cycle reinforce its profile as a defensive and profitable investment over the long term. Stock 8. Altria Group. And finally, we have one of the most important tobacco companies in the United States and the world. Its history dates back to 1847 with the founding of Philip Morris. And today, Altria is known for owning Marlboro in the U.S. market, in addition to holding stakes in the smokeless tobacco, alcoholic beverage, and cannabis sectors through strategic investments in companies such as Kronos and Anheuser-Busch InBev. Despite belonging to a controversial and increasingly regulated industry, Altria has demonstrated an exceptional ability to consistently generate cash, thanks to strong brand loyalty, market dominance, and high profit margins. This strength translates into a dividend yield of nearly 7%. Although not a high-growth stock, Altria is a dividend-generating machine. Its business model, centered on addictive, recurring consumer products, allows it to weather economic crises with relative ease, establishing itself as a defensive option in times of uncertainty. Each of these 8 companies has demonstrated an investor-centric strategy, delivering profits even in the darkest economic years. Investing in them is a commitment to solidity, patience, and the accumulation of real wealth. Automatically becomes a source of income. So the next time you think about stocks, ask yourself, is this company going to pay me and protect me for the next 30 years? Do you know of any other actions we should include on this list? We'll read them in the comments. If you enjoyed today's content, remember to give a like and subscribe to the channel so you don't miss our next videos. See you later.